Hi everyone, so welcome to Investing for Value. So today I want to talk about what the VIX is and how it can assist you in terms of your investing. So if you looked at last week, we had a 1,191 point drop, and that was the largest drop in history. And you look at this week, we just had the largest point gain of 1,293. So when you look at those numbers, they are large and they roughly represent about 5% of the market. Those numbers represent the drop of the Dow, so not the S&P 500, but the Dow. Okay, so and that's quite a large point drop. So and we've never had it in history. So like they're very close to each other. This was last week, and this was this week. So markets either really highly valued or are they really undervalued? And you must be wondering. So, and then it kind of leads on to like what stocks should you be investing in because it's very volatile. Who loves holding onto stocks while they go up and down in massive ways? And sometimes you don't know what stocks are going to do well because if you know like if markets were efficient, like we wouldn't have these two situations when something starts rising and then preceded by that massive drop. Like these things don't happen if markets were really efficient. But the one thing is they're obviously really emotional, especially with the current situation. And this is where the fix comes in. So like you'll have a lot of ETFs that allow you to invest in indexes like say S&P 500. Well, there's also a product where if you think the S&P 500 is not going to do too well, then you basically can bet against it. So, which is basically this product here, the VIX. So there's multiple of these products. You can just go to like your financial search engine, like say you go to Yahoo Finance, type in the VIX, and then you're going to get a lot of different VIX products. Some will be like more short term, and some of them will be a medium term, and some will be like a bit more long term. And that's kind of, it gives you the shorter term stuff kind of rises and falls quicker. But if you don't like that, you can always go to the longer term stuff, and then when the drops when the drops happen, they aren't as bad, and when the rises happen, they aren't as great either. But at least you protect your up and downside. So in terms of the VIX, it's also standing for it also stands for like a fear index because when markets are rising, it goes down, and when markets are dropping, it goes up. So this chart here, where it's gone up 5%, well, the Dow rose 5% on the same day. It rose 5%, and this dropped 5%. So you can kind of see the correlation is very high. So if you believe the market is overvalued, or you just believe it's very volatile and it's going to drop, then the VIX products are something that you can utilize, and it can kind of help you when you're a bit unsure of what companies to invest in, because you could invest in companies, but companies just have these underlying factors that you just have to know really well in terms of like economic factors. And by having the VIX, or like you have a like you just have you kind of it's kind of like invest when people tell you to invest in an index of like the S&P 500, and they go, well, basically your downside's protected in a way because um, when some companies don't do well, there is also a lot of companies that do really well, and overall the market rises. And that's the thing. So like the VIX is also like an opposite of that. There are some companies that do well, but there's going to be a lot of companies that don't do well. So then basically that is your, it kind of like it's such a broad product that it doesn't matter if some companies do well, but if the general scheme of things that most companies don't do well, then it goes down and you earn money as it goes down. And you must be, and you. This is more like an economic bet in a sense because you're looking at, say, like the S&P 500, and you're going, most of these companies could be facing downgrades. Most of these companies could be in trouble. So I'm going to buy this product, and I'm going to bet against the market. And then that's kind of an easy way to do it rather than going, Well, I know cruises aren't doing well. I know airlines aren't doing well, so I'm just gonna bet short them all. And then but you don't. But at the same time, you're like, which airline do I go for? Which thing do I go for? And you're like, I don't necessarily want to short them. What if they just prop up again? So that's kind of like where the VIX comes in as a product that kind of mimics the S&P 500, and you kind of just get a more broader situation. So if you think the overall economy is going down, then it allows you to be more right. So like the is but like all indexes, like the upside is only as good as like the whole broader situation. So like if you know something's not doing well, if you like know a certain airline or a certain cruise line and that's not doing well, then it probably is easier just to do the individual company. Though if you're not too sure, you don't want to really like exhaust yourself trying to like research every detail about a company, then this is the same thing. It's just like if indexes like save you time and give you the upside of markets doing well, a VIX also saves you time for when markets don't do well. So it always makes for a really good hedge, if you know what I mean. So like if you buy certain products um, that you expect for the market to do well, then you could also use the VIX as a little bit of a hedge, and that's kind of where such a product kind of just helps you when things happen in the opposite direction, or you just might be like really pessimistic about the market, and this kind of product just allows you to hold because you can short markets, but like you can do it on margin in most cases, and margin isn't very friendly. If like the market turns upwards in a big way, you could be like kicked out of your position. And if you do options, well, options like especially individual options, they have expiry dates, and you've got a big problem when they expire. But if you do this product here, there's not really there's not really certain expiry dates that you have to look out for. You just invest in a product, and the product takes care of itself. So it's not a very happy product. It's not a great product where you go, well, I just see markets are not doing well, so I'm just going to short them all. But that can be a reality, especially this year. Like if things look a bit too recessionary. We expect a lot of downgrades, especially with largest point drop. Then things could work in your favor in that sense. But same thing if markets recover really quick, then we have the largest point rise. So it really depends. Like you might be going, market's still quite frothy, it's quite high. I want to like short it, but I don't want to be in really, really risky products. I don't want an option with an expiry date. I don't want to short companies on margin. Then this is kind of the product that you go for because VIX allows you to basically bet against the market. Now, now this is also a product that you should have a bit of caution about. If markets rise, you lose money, of course, and if markets drop, you gain money. So you just have to understand, like in the scheme of things, it's not a really complicated product. It's pretty easy to understand. When markets rise, you lose money. When markets drop, you earn money. And if you can't understand that, then probably don't buy it. But if you understand it, and you think it's one of these products that you could use as a hedge for your portfolio, or in general, you just think the market's not doing well, and you just don't know what companies to buy or short, and you just want to bet against the market, and you're going to put a little bit of position there, just to bet against the market, because like markets could have like a really good rise, and then you'll be like, oh well, I believe there's going to be a little bit of a correction. It's kind of like last week when the markets dropped, including the largest point drop, but it also included the largest 10%, the quickest 10% correction in history. Then it kind of made sense that it's going to be like there's going to be a bit of buying because when you drop over 10%, well, there's always going to be a bit of bargain buying. So that's basically what happened. That's why we got a large point rise. Um, And that's kind of like we're having something like the VIX because we haven't had a really volatile market in quite a while. Like it dates back to like 2018 when the market just went whoo, and that's kind of one of those situations. Like markets didn't do well in 2018, but ever since markets were just rising really well. And then we're having this repeat situation where markets could plunge like quite a lot, depending on how events go with things around the world. So I want you to like consider the VIX, but it's by no means a product that you have to buy into. But I think the knowledge of the product definitely helps. You can always like it's one of these products that can assist you in terms of your investing if you need it. But a lot of people have been investing for a long time without even knowing what the VIX is or about these VIX products. But I think it's always wise to know a bit more about what's out there. It probably took me quite a few years in terms of my investing journey before I even knew about the VIX. I didn't really engage that much in the VIX, but with these point drops, I think this might be one of those really good opportunities where market is really volatile, where there's a lot of fear, and this kind of product kind of fits that criteria. So it's kind of one of those products that, yeah, I think I thought I'd just like speak about because it's worth knowing about, particularly if you're going to be investing in a market and you've got a lot of long positions. This is kind of one of those positions which are like going short, and it might just protect you against some of the downside. But it's one of those things like it's worth knowing about. You don't have to use it, but it's something that's very interesting. But in the scheme of things, yeah. Let me know if you have any other questions or any other companies you want me to look into. Until then, well, good luck investing, everyone.